The barista smiled, but her eyes did not. She looked at the tablet in front of her, then back at Leo.
I'm sorry, your payment was declined.
Leo felt a familiar knot tighten in his stomach. He had the money. He knew the funds were in his account. He had checked just that morning before leaving his small apartment. The problem wasn't money, the problem was his number. His reputation score had dropped overnight, and now even a simple cup of coffee was beyond his reach. The small digital display above the counter, visible to the growing line behind him, flashed a polite but firm message. Transaction denied. Insufficient social capital. This is the world of the reputation credit reset. It is a world that decided the old ways of judging a person's worth were too narrow. So, what is this number that holds so much power? A reputation score is, in its simplest form, a dynamic, real-time measurement of your trustworthiness. Think of it as a credit score for your entire life. It is a single, unified metric ranging from a low of 1 to a high of 1,000 that attempts to answer a fundamental question for society. Can this person be trusted? It is not a static number, frozen in time. It breathes. It changes with every interaction, every transaction, every public act and private choice that the system is able to see. Quick break. If you're enjoying this, please like, comment, and subscribe for future videos. Thanks for the support. Alright, let's jump back in. It is designed to be the ultimate barometer of social reliability, but it expands the definition of behavior far beyond paying bills on time. The system's creators argued that a person who is a good neighbor, a reliable employee, a considerate community member is also more likely to be a responsible borrower, a safe driver, a trustworthy tenant. Therefore, by capturing a wider array of data points, the reputation score could create a more accurate and fair picture of an individual. It was presented as a move away from the cold, impersonal world of finance and toward a more interconnected, community-oriented society. This score is not optional, it is universal. From the moment you are issued a digital identity as a teenager, your score begins its lifelong journey. It follows you everywhere. It has become the primary key that unlocks or locks the doors of opportunity. A high score brings benefits, lower interest rates, better job offers, priority service. The most immediate and profound effects of the reputation score are felt in the core areas of economic life, banking, and employment. For banks, the new score is a dream come true. It offers a much richer, more predictive tool for assessing risk. A person with a high score, say 850 or above, is seen as the gold standard of reliability. When they walk into a bank, they are offered the best possible terms. Mortgages come with rock-bottom interest rates. Car loans are approved instantly on a smartphone app. Lines of credit are extended with barely a question asked. For those in the middle, with scores from 600 to 800, life is a series of careful calculations. They qualify for loans, but the terms are less favourable. The interest rate on their mortgage might be a full percentage point higher. That adds up to tens of thousands over the life of the loan. They are approved for jobs, but perhaps not for leadership positions that require a high degree of public trust. Every major life decision is weighed against its potential impact on their score. They live in a state of perpetual reputation management, careful not to make a misstep that could send their number tumbling. For those with low scores, like Leo in the Café, the financial world becomes a fortress with its gates locked tight. A score below 500 makes it nearly impossible to get a traditional loan. Banks see them as unreliable, not just financially, but fundamentally. They are relegated to high-interest, predatory lending services that often trap them in a cycle of debt, further damaging their score. Hiring managers now use the reputation score as a primary screening tool. The reputation score did not just change our relationship with institutions, it fundamentally rewired our relationships with each other. Trust, once a feeling cultivated over time through shared experiences, became a transaction mediated by a number. Before meeting someone for a date, you would check their score. A low number might be a red flag, suggesting they are unreliable, difficult, have a hidden past. A high score, conversely, could create an instant and perhaps unearned halo effect. Friend groups began to subtly stratify by score. People naturally gravitated toward others in their own numerical tier. Associating with low-scoring individuals could even be risky. Their negative actions could splash back and tarnish your reputation. Community life took on a new performative quality. Knowing that your neighbors could rate you, people became exquisitely polite. But beneath this placid exterior, a current of anxiety ran deep. Both could lead to a flurry of negative community ratings, sending your score into a perilous slide. The friendly wave to a neighbor was no longer just a friendly wave. It was an act of reputation maintenance. In the gig economy, this was most apparent. You wouldn't get into a rideshare with a driver whose score was below 700. You wouldn't hire a handyman with a 650 to fix your plumbing. This system of peer-to-peer ratings was meant to build trust and ensure quality. It did, to a degree. But it also eliminated spontaneity and forgiveness. Amidst the anxiety and the social stratification, an entirely unexpected consequence began to emerge. It was a quiet revolution, happening not in the gleaming data centers or the halls of power, but in small workshops, kitchens, studios. The reputation system, in its relentless drive to quantify quality, had inadvertently created a powerful countercurrent. It sparked a renaissance of genuine craftsmanship and bespoke services. In the new world, her reputation score was her greatest asset. Every loaf, every perfectly flaky croissant, was an opportunity for a 5-star rating. As her score climbed into the 900s, it became a beacon for customers. The system, designed for social control, had accidentally created a meritocracy of talent. People began to seek out individuals, not corporations. This created a positive feedback loop. The algorithm, in its cold logic, had unintentionally breathed new life into the most human of endeavors, the art of doing something well. For all its perceived benefits, the reputation system was built on a fragile foundation riddled with risks and systemic flaws. The most glaring issue was the complete erosion of privacy. To function, the system needed data, and it was insatiably hungry. It consumed your purchase history, your location data, your social media activity, your communication patterns, and even biometric data from public sensors. The concept of a private life, of a space free from judgment and observation, simply ceased to exist. Every choice, no matter how small, was a potential data point, a piece of evidence to be used in the perpetual trial of your character. The system was also plagued by the problem of bias, baked deep into its algorithms. Neighborhoods that were historically over-policed might see their residents' scores start from a lower baseline. A person working 3 low-wage jobs to make ends meet had less time for the civic engagement activities, like volunteering, that boosted scores. Then there was the terrifying finality of errors. A single false accusation, amplified through social media and peer rating systems, could be catastrophic. While there were appeal processes, they were often bureaucratic and slow, like fighting a faceless machine. These were the real-world consequences of a single digital mistake. As the flaws and fractures in the reputation system became more apparent, a global conversation began to emerge. The question was no longer whether the system should exist, it was too deeply embedded for that, but how it could be reformed. Proponents of reform focused on a few key principles, the first of which was radical transparency. They argued that every individual should have the right to see exactly how their score was calculated, what data points were used, how much weight each carried, and what specific actions led to change. Another critical pillar of reform was the establishment of a robust and accessible appeals process. This court would have the power to manually override the algorithm, to correct a person's score, and to penalize those who abused the rating system. Reformers also called for strict limits on data and for score decay, letting old mistakes fade. Finally, there was a push to limit the score's domain of influence. We stand today, on November 4, 2025, in the midst of this grand social experiment. The reputation credit reset was born from a noble desire to create a fairer, more trustworthy world. It has in some ways succeeded. Yet this progress has come at a steep price. We live under the constant gaze of an invisible judge, an algorithm that knows our actions but not our intentions. In our quest to build a society that is perfectly trustworthy, are we creating a world where it is no longer possible to be fully human? You've been watching IfVerse, where imagination meets possibility. See you in the next reality.